What's up guys, it's Victor right here and welcome back to the channel. If you're new to the channel, my name is Victor and in this channel I'm going to be posting trading related content, just a way of sharing my knowledge and giving back to the community of traders. So let's dive right in. In this video today, I'm going to be going over two trades that I took yesterday and today. One of them was taken yesterday and one was taken today. The one that was taken yesterday was CADJPY, and this morning we took an AUDJPY trade. So in this video, I'm going to be doing a review of doing a review of the trade and the reason why I took the trade, the analysis behind the entry, my entry technique, the risk management technique, and also how I was able to stay out through the trade to let it run to take profit. The first one was about a 1 to 3.2 risk to reward, and the second one was a 1 to 4.5 risk to reward. So in this video, I'm going to be making a review of the reason why I took these trades, and maybe if something like this sets up next time, maybe you can also identify it and take the same trades yourself. So let's dive right in. Thank you. So we're pretty much in the charts now, and the first trade I'm going to be reviewing is the CADJPY trade. So this was a long position, as we can see here, and it was about a 1 to 3.2 risk to reward ratio. Now what I'm going to be doing is going over the analysis that I did before entering the trade and my entry technique. Now first off, before you enter a trade, you need to understand market structure. You need to understand what the market is telling you, how it's structured out, and then what you are meant to do when it gets to certain points. Now for CADJPY, if I zoom out, we can see that previously here the market was in an uptrend, looking at the left hand side, making higher highs and higher lows, higher highs and higher lows. Now we got to this high. At this high, price broke the high and came back and tested the high and went up a little bit. Now a new high was created in the market. Okay, now after this new high, what we would have expected was for price to break this high again, because as at this place is a high and it was also acting as resistance, because we can see that price came here, bounced the first time, came here, bounced the first time, came here, bounced the second time, and bounced the third time. So this is a pure resistance zone and also a high per se. So what I was expecting was for price to break this high and keep on pushing up, but then that didn't happen. What we saw was price broke below the previous high and started testing this zone as support. Now this zone was support, it was now flipped to resistance here. Now what happened at this point is what we call a break of structure, BOS, break of market structure. Now what it simply means is that the market structure was broken from an uptrend to a downtrend. So with this move here and with this market structure, we can identify that we've somewhat moved from an uptrend to a downtrend. Now price tested this zone, this support zone, and flipped it to resistance at this zone. Now we kept on moving down. Now another support was created, it was identified. Now price broke the support zone again. Now remember that we are now in a downtrend, and what we are going to be looking for is shorts or our shorts. So price broke this support zone all the way down and came back to test that zone. You understand? But meanwhile, looking back from previous market data, we see this zone, this previous zone that acted as resistance and flipped to support at this zone. Now this zone was still in play. That's why when price came all the way here, we saw this little price action. On the Telegram, we took this sell, but we ended up getting stopped out. Now we waited patiently for price to retrace all the way back to this support zone and flip to resistance. Now at this zone, that happened, and we took this sell position all the way to the downside on the Telegram. Now when price came, now the reason why I got in on this long position was simply this. Remember that this zone here acted as resistance and now flipped to support at this zone when we are still in an uptrend. Now this zone was still significant, and I knew with price action at that zone that when price came all the way down here that we are going to see a kind of bullish reaction that might potentially push price to the upside. Now when price came there, I waited patiently. First of all, when price came there, it simply broke the zone, tested it and went down a little bit. But because of the significance of that zone and the presence of buyers at that zone, price broke back above the zone. Now this was the understanding of market structure, the reason why I took the trade and the reason why I was looking for shorts. Now coming to explain my entry technique. Before you enter a trade, there are three things you look out for. The first one is the trend, that is market structure, whether you are looking for buys or sells, or that is whether you're looking for long positions or short positions. Now the second thing that you are going to look out for are the key levels. For me, I'm a price action trader, so I look for key levels in the market, key levels of demand and supply, also known as support and resistance. So I've identified the trend, the market structure. I've identified that the CADJPY moved from an uptrend to a downtrend. So market structure was broken. So my bias changed from longs to shorts. Now, have I also identified my key levels? These key levels are so important because it is from these zones that price grabs volatility and makes decent moves. So now on CADJPY, looking at this zone, this was a key level. This zone marked out here, it was a key level. So when price made the move back above this zone with this candle, now the entry technique was, there are two things I look out for when price comes to a zone. If I'm looking to sell at the resistance, I'll be looking for rejection candles or bearish engulfing candles. So in this case, this was I was looking for long positions because price has retraced all the way back to this zone. We are still in a downtrend, but it was a good trade to take because price came to the support and started showing a bullish indication. So I thought of it and saw that price has closed this nice bullish engulfing candle here, and I knew that the momentum was with the buyers more than the sellers at this point, although we are still in a downtrend. So I took the trade and my stops were just below the zone, and then the trade moved into profit immediately. There was no drawdown on this trade and it hit all the way, went to take profit. So basically I've explained my analysis, my entry technique. Simply the reason for my entry was this bullish engulfing candle here, or this bullish candle that had momentum. Now the third thing was my risk management. First off, when trade, you need to understand that you should stop looking at the dollar value and count in percentage. Now after bringing out this risk to reward tool, this trade was a 1 to 3.2 risk to reward. So I was risking about 1% of my account. So we gained about 3.2 times our initial risk on this trade. So that's it for CADJPY. I hope you understood everything. Now coming to the second trade, which was AUDJPY. Now basically this trade is just I've already closed it out at break even though, but then I just want to explain what happened. It's almost the same thing with CADJPY. Previously we were in a downtrend, we were in an uptrend, sorry, but then we identified this our key levels, this key level of support, which was tested here as resistance. Now after price action at this zone, which was these bearish engulfing candles in the channel, we took this sell position and it hit take profit for a 1 to 2 point, around 2.5 risk reward. Now when price came all the way back to this zone, I was expecting price to push up from here directly. Let me pull out my cursor, but that didn't happen. It came all the way down, tested it, and kept going down. But then, due to the momentum the buyers had at the time, it pushed back up and tested that zone. This zone was a little support, a little resistance zone, but then price broke the resistance zone and flipped it to support. Now my entry technique, the reason for my entry was the formation of this bullish engulfing candle. As you can see, that was exactly where I entered. Immediately price closed that candle, I entered. It went into about 50% profit, and then obviously according to my trading plan, I booked out 50% and set my stops to break even. I also updated in the channel. I'm going to be leaving the link of the Telegram channel in the description, so if you want to join, you can go there and join. Now price the next day or yesterday just came all the way down, stopped us out at break even pretty much. So this was a good trade. It was a 1 to, let me check, around the 1 to, wait, let me check. Sorry, I'm doing this with my phone. My laptop is not available now, so let me just pull up and draw it again. So this was we entered immediately at the close of this candle, and we were targeting all the way back to these highs. Sorry, I didn't draw that right. Wait, give me a little time. So we entered at this zone after the close of that H1 engulfing candle, and our stops were just below the zone there. So it was about a 3.2 risk to reward, I think. No, it was about, yeah, a 4.5 risk to reward, because our stops were just below the zone. I wasn't willing to risk that much, and it was about an 18 to 20 pip stop. So price went into about 50% profit. I booked out 50% of the positions and set the stops to break even, and then price came out and stopped us out at break even. So pretty much we gained about 2% on this trade because I was risking 1%. So I just hope you grabbed some value from this zone. What I want you to take away is that if you are a price action trader, first of all, you need to understand the trend, the market structure. After understanding market structure, you mark out your key levels. Your key levels are the zones from which you will take your trades, in my case anyway. And then for people who use psychological levels, it's almost the same way. And then the third thing is your risk management. Then talking about how I was able to stay throughout these trades for CADJPY, simply you just have to understand and trust in your analysis and say, okay, I've entered this trade for the long, and I'm willing to stay in it till it hits the target. Now the little drawdown I had on CADJPY at the Asian session open didn't move me. I just needed to leave it, and then the next morning it hit take profit. So that's just how to do. You need to manage your psychology and all that stuff. So this is pretty much the two trades we took yesterday, day before yesterday and yesterday. This is a review. I just hope you grabbed something. So if you like this video, is an appeal. If you like this video and you know within yourself that you've learned something from this video, do me a favor by subscribing to the channel and liking the video. It will help the channel a lot. As you can see, we're just starting, so please do me a favor by liking this video and hitting on the subscribe button. Thank you. We'll meet in the next video.